The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 27, Nasdaq off 3, S&P's also off 3, gold up 520, trading at $15.23 an ounce. We get silver down 2 cents, $17.97 an ounce. Light sweet crude off 85 cents, $60.83 a barrel. Notes and bonds. You get the 10-year down 8 ticks, 128.08. 30-year off 23 at 155.16. And King Dollar. King Dollar down 293 ticks, trading 96.445. Euro at 112. Yen at 108.57. You're going to have the Japanese markets now closed for 7 or 8 days, folks. So we're not going to see a lot of movement in them. Well, we're not going to see any movement in the Nikkei. Bottom line, the yen, that'll still move around. Pounds at 132 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning. Happy New Year's Eve.
Yeah, last trading day in the decade, as our man, Mr. Larry Pesavento, was talking about. Pretty wild, man.
It is, man.
Hey, so, we get a thriller. There's no doubt. I mean, how about this Goshen deal?
I was thinking that as well, man.
This is Carlos Goshen, folks, bottom line is that he was the former head of Nissan and Renault, monster inside the car business. He made his escape from Tokyo.
He was supposed to be in house arrest, right?
Yeah.
And not so much anymore, man.
No, he's back. I don't think he ever grew up in Lebanon. His parents did.
Yeah, maybe even his grandparents, I believe.
Yeah. You know what's amazing? Like, it's not amazing that he got out of there. I almost don't blame him to get out of there because in Japan, they get a 100% conviction rate. So it's pretty intense. However that system is set up there. Do you know what I'm saying? But
yeah, and I imagine we'll hear more about it because of the way that this is going to add some publicity to that. And I think it has to do with as well that, remember, they had him and they charged him, and then they just charged him again to keep him.
That's right. That's right.
So I don't even know about the 100%. 100% is quite a number, but the fact that they can just keep somebody,
yes,
without being able to, they can charge them, drop the charges, recharge them, I believe, and bring them back in, so you can never get out of jail without technically being charged for a long period of time.
Right. I know.
It also adds light to boy, oh boy, man, when you have some money, it's pretty remarkable. Number one, you got on house arrest, right?
Yep.
That probably isn't going to happen to a regular citizen over in Japan,
No.
let alone we deal with the same thing in the U.S.
$9 million bail. Yep.
Yeah, and then somehow, and it'll be really interesting, I mean, maybe they'll make a movie out of it, man, because how did he get out of there, right?
Well,
how did he get overseas?
This is a couple rumors. So listen to this. He had a Christmas band come into his house and play for Christmas. And the speculation is, in this article here, is that he hid inside one of the big boxes as they were taking the instruments back out. Exactly, man.
Straight out of a movie script, man.
It is. It's pretty intense, man. It's like pretty wild. So, other than that, hey, King Dollar, folks, bottom line is this is going to get interesting with the dollar. I mean, this dollar, you're going to drop, it's not dramatic, but it's a drop with conviction. And there's no doubt that we have broken the uptrend, and this uptrend, I can't wait. So Teddy Kegstack, we're going to talk to him Thursday, Tom, right? He's going to do a show Thursday?
No, we're talking to him today, man, at 10:30.
Oh, that's awesome, man. Okay,
yes,
that's great.
So he is going to be covering for our man Dave White, doing an hour-long show at 2 o'clock, kicking off the new year, talking Forex. But we're going to talk to him today at 10:30 on the program, get a wrap-up of the Forex market. So it'll be interesting.
That's huge because
yes.
These currencies, man, folks, when they trend, they really trend. I mean, this thing, February of 2018, I mean, we're almost talking 2 years, right? Yeah, that's quite a trend. You know, now that being said, now watch this, folks. Okay, it trended. Well, no, this is a good. Yeah, I was gonna say I didn't realize that. I thought it didn't do that type of expansion, but that did more than a 0.618 expansion. So that's a strong. Yeah, it did a 786. It almost did a 786 from the highs of 103 down to the lows of 88. So that's strong. That's definitely strong. There's no doubt about that. The rest of this market, bottom line is that will be intriguing today. Of course, we had Christmas Eve a half a day. No half a day today. Last day you can sell for basically tax purposes. You know, we'll see what shakes out here. It doesn't look to me like there's going to be a lot of something happening. You know, notes and bonds. You see that note and bond yesterday? So watch this, folks.
Oh boy, man! Talk about volatility.
Seriously, we'll put this up. We'll put the note and bond market up. I'm just going to put the yield up, and I'm going to put it up just on a 2-day chart. Look at this thing. So when Tommy and I were on the right before we got on the air yesterday, the yield was at 1.935, 938.
Yes.
And by the time we closed in the afternoon, we're at 1.878.
Which is where we started the day, man.
Yeah. And now we're back to 1.921, which is
nice little roller coaster they got going on.
Oh my God, it's pretty amazing. It really is.
It is.
It's big numbers. No two ways about that. And of course, you know, when we were on the air yesterday too, Tom, is that Apple was down and Apple shook it off yesterday, man.
Boy, oh boy, right? What a move for Apple, man.
Yeah, right?
Yeah, you were under 286. You closed the day out at just a hair under 292, and right now you got a spike from 290 to 292 right on the open almost, and Apple up again, flirting with the all-time highs. You know, it's amazing. If we jump to the front page of TFNN, I'm going to pull it up because there were some stats on CNBC I pulled, man, and I'll give them credit for the sourcing because they deserve it because, boy, oh boy, these stats, man, are amazing. So Apple and Microsoft led the way higher for stocks in 2019, rallying, and this is with today still to go, 84.4% and 55.2%. And when you factor in the cap weighting that those two companies have as well, just a mammoth number that they're the best performing Dow stocks of the year and accounted for 15% of the S&P 500's overall gains for the entire year. Two companies out of 500.
That's
you have
wild, man.
Yeah, chip makers, AMD, Lam Research, KLA were the best performing stocks in 2019. AMD and Lam were up more than 100%. KLA was 99.3%. They got 1 day left. They might get it.
Wow.
And then you had Target and Chipotle rallying more than 90%. The stat I found most interesting, Tuesday marked the final trading day of the decade. Over the past 10 years, S&P has surged more than 188%.
Pretty amazing.
It is.
That morning market report, folks, it's out there. Tommy does it every morning. You're out there in the morning, you want to get going, just go to TFNN, hit, you know, you'll see it right in the featured content, and then in the afternoon, there's an afternoon wrap-up. So check it out every trading day. Our phone number is 877-927-6648. We have the Dow Industrials right now trading down 12, NASDAQ up 3, S&P's up 1.5. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 10, Nasdaq up 6, S&P's flat. And, of course, on, well, today's Tuesday, right? Yeah, so on Wednesdays, we normally have oil. Thursdays, we have gas. And I got to bring this up because this is
I figured that's where you might be going. You sent me that email this morning. I just had a hunch, man. Quite a story.
It is. Now, this here, folks, you know, we've been talking about natural gas. It's been going down for long periods of time. This one here, what this is all about, and this is why they called, you know, you'll see the top of it, Widowmaker. Gas spreads collapse as traders see no winter blast. So this trade here is, like, if we look back the last 12 or 13 years, this has been the biggest trade that has wiped out folks that have been in this business for long periods of time and wiped out, I believe about 7 or 8 years ago, one wipeout, Tom and folks, was $5.4 billion. It was like an outrageous amount. And what it is this. This is what it is. So they got a chart in here of how this collapsed, okay? So this, there was a 30 cent. Now, that doesn't sound like a lot of money, folks, but people that are trading these, what a spread means is that you're buying one contract and selling another, folks. That's what a spread is, okay? And in this particular case, you can see by looking at this chart that the March contract in November, so this is in November, the March contract had traded 30 cents above the April contract. And as people put those trades on, okay, yeah, thanks, Z. It's Ambereth. Yeah, Ambereth. That's Ambereth. That was the one that had, like, it was just, I forget the exact number, but it was insane. But it's amazing that, you know, bottom line is that we have plenty of energy, and that you know, even inside this article, it's showing that the gas for delivery in March, when stockpiles are typically at their lowest, as the season winds down, usually trades at a premium to April when milder weather helps replenish storage. But the U.S. is so awash with gas, and the outlook for some serious cold temperatures has become so dim that March gas traded at par with April futures yesterday. Mark, the first time that's happened for 2020 contracts on the New York Merc. In November, March traded more than 30 cents higher. Man, that's intense. So the spreads reversal underscores the tenacity of the shale boom, which sent U.S. production to record highs and replenished stockpiles that ended last winter at more than 30% below the 5-year average. You know what's so wild, too, is that I remember, I mean, even when Andy Heck was on, right, and that's a long period of time, natural gas has been under this average for a long period of time, but it doesn't seem to matter because guess what? It's like they just open up a spigot or something, as much natural gas as you want. You know what I mean?
You know, just that last paragraph, I'm just skimming it as you got it, though. Check out last year, and this is why people were probably buying that spread. A cold snap in January and February can quickly inflate the Widowmaker. Yeah. In November of 18, the premium on March gas widened to $1.75 before collapsing almost as quickly to near zero. And that's, I think, the loss that we saw, where you had people buying that spread at $1.75 and having to go to zero, whereas this year it was just at 30 cents and went to zero. But I imagine.
Oh, I'm glad you picked that up because I was sitting there trying to figure out, like, why do people keep doing this, right? Do you know what I mean?
They were looking for 30 cents to $1.75 and maybe trying to get out of Dodge before maybe it pulled back, right?
Right.
But instead of that, we got no appreciation at all, which was not expected, I'm sure, which was not expected. And that's how people can get hurt when they play, high probability events, right? Which is that's what this would have been, as in this would have been a high probability event that you're buying the spread and that it is going to appreciate in value.
Yeah.
But the time that you have it where, you get an outlier almost, which is you get no cold temperatures, and the supplies just continue to build and the price never rises in March ahead of April, which is, you're never paying more for gas during the winter than you are in the spring, which doesn't make sense, of course.
It doesn't. Now, if we take a look at the contract, you're going to see this contract is in trouble right now. Now, this is the January 20th contract I'm looking at. You're at 215. Now, if I'm going to put up the generic one just for a second because it looks to me like, $2 is the next number. But, okay, so I'm going to put this on like a 3-year. Okay, so, yeah, I guess 202. This is interesting. We're right at the high of the low that was established in August of 2019. So the high of that's at 2.155. So,
okay,
you get a little support there at the high. We'll see what happens. But you break that, man, it's like, wow.
Yes.
Spreads. Oh my God. But I can see. Yeah, I can see those bets now. How that works.
Yeah. And it just makes sense. In terms of fundamentally, right? There's no way that natural gas should be the same price throughout the entire winter season, especially when you look at previous years, when you've seen that type of divergence of the two contracts, with a little bit more expensive January, February, March, and then things cheapen as the supplies replenish into the spring.
Yeah, no doubt. And I guess, if you look at New York tonight is going to be, 40, 45, balmy, and it might rain. So that, folks, okay, that says quite a bit. Do you know what I mean? 40, 45 in New York on New Year's Eve night is a nice night,
Definitely.
They'll have their shots on up there.
Yes, some will. So they'll be in tank tops and shorts in Times Square, I imagine.
Oh my God! I'm telling
Party
you.
time.
Let's take a look at some of the higher volume equities out here. Not that you're going to have volume out here. What did happen yesterday, though, you had volume on the way down inside the NASDAQ, folks. So they were moving some product out. You have we have Tesla up $1.59. That was down $17 yesterday. So that took a hit. You get Microsoft down 57 cents, no big deal there. U.S. Steel's up 23. We got, there's not a lot of movers out here, man.
Yeah. Uber's been in the press a lot lately with lawsuits everywhere. I guess Uber and Postmates suing California as they battle out there.
Yeah, that's going to be a pretty cool suit, folks, okay? Because, I was reading about this last night, Tom.
Yes.
And Uber and Postmates make a great argument inside their brief that they put in, because what has happened here is that there's no doubt that the legislators have basically targeted the gig economy, right?
Yes. Yeah.
When the bottom line, folks, is that everything has to be basically on an even keel, and what they're saying is that, hey, hold it. Now this is interesting here. Inside this, and I didn't know this, inside this law in California, folks, let's picture that, Tommy, that you were writing for TFNN, okay?
Yep.
And we were in California. And you were a contractor, right? Well, there's a certain amount of articles that you can write, and then TFNN would have to make you an employee versus a contractor.
Yeah.
So what they're saying is that, hey, listen, when you're talking about direct salespeople, travel agents, grant writers, construction drivers, commercial fishermen, they're all exempt from the law. And it's like, why?
Yeah.
Not that I'm sticking up for Uber. I'm not sticking up for Uber, but I'm sticking up for the law in general. Do you know what I mean? Yeah. It's like, pretty wild.
It can't be arbitrary,
right.
Because, you don't want to be in that position, you or I or anybody out there. You want it to be fair.
We got our man Teddy Cakestack coming up.
Forex.
Stay right there. Talking currencies, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 43, Nasdaq's off 3.5, S&Ps are off 4.5. Let's go over to our man, Mr. Teddy Cakestack. And Teddy, folks, can be found every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakestack, what's happening, brother?
Oh, it's a New Year's Eve. Looking forward to seeing how the dollar settles today.
Yeah, me too. I like it. The dollar's getting destroyed. Sell it, baby. Sell it.
right?
So we need your advice, Teddy. Tell us what's going on. I just said to Tommy a little bit. I thought you were talking to us on Thursday, but I know you're going to be doing a show on Thursday, which is just fabulous. Okay, he's going to be 2 to 3 Eastern Standard Time, folks. Teddy's going to do Dave White's show, so we really appreciate that, man. Hey, we finally get some movement in the dollar, right? So just where do you want to start?
Well, I'll tell you what, the dollar index is exactly where I want to start.
Cool.
You know, back in October, we got that one sell signal, and then we had a little bit of a retracement, and the dollar seemed to have some strength in November, but December, we didn't get a Christmas gift for the U.S. dollar, did we?
No, we didn't. And
and I don't think that the market's going to turn around too much today. I really can't see a big rally. I mean, anything can happen, right? But
sure.
I don't think that's going to happen today. So, but I'm actually negative the dollar, and not too extreme, but I can see that the next 3 to 6 months, maybe even 12 months, that the dollar is going to be under pressure. So, and I think that that's going to give a nice little bit of a lift to the euro a little bit, but not too much. I think that's going to be very oil related.
Okay.
I think the pound is definitely going to have a chance at exploding to the upside.
When you say that the euro would be oil related, how does that work?
Okay, well, if you've noticed that obviously over the course of 2019, oil has had a big rally.
Yes.
Okay. Now, the euro, the U.S. dollar is considered the petrodollar globally, or has been for decades. But over the past literally 10 years, and especially over the last 5 years, you have more and more where the euro is becoming a petrodollar.
Okay.
You know, for whatever reasons, whether it's, you know, even the Chinese, when they buy oil, or in other countries, they're not using U.S. dollars.
Yeah.
So that means a demand for the euro. So now we have today was really interesting, was watching some of the broader indexes where we're at on the year. I mean, everyone's looking at the U.S. growth being like, wow, 30% growth, this is amazing, you know, it can't happen again next year. Whatever, we don't know about what's going to happen, but there's been a very interesting lift in both Europe and in China for the broad-based index for their economies. They're up over 20% this year. That's huge.
Listen, man, I was looking at Shanghai. Shanghai looks like it's going to bust topside in a big way, man. Not last night, the night before, man. That's getting up to the top of the consolidation. Yeah. All right.
Right. Now, gentlemen, this is all in the wake of trade wars, too. How is it that China is up 23% over this year in the wake of all these tariff blah, blah, blahs? You know, and everyone for a year has been saying doom and gloom. It's going to crush our economy. It's going to crush the Chinese economy. And the net result of all this stuff is that Asia's booming. China's actually doing well in the wake of this tariff stuff, you know, and Europe, for some reason, too, which they've been screaming recessions for a long time. Now, not necessarily Germany. Germany has its issues. But the European Union as a whole, even in the midst of Brexit and not knowing any clarity on what's going to happen with trade, they're up 20-some% on the year.
Right. No, there's no doubt, man. There's no doubt. You know, these currencies, I know we talked about this before, but it's pretty amazing. Like, to me, that, you know, the dollar has broken this uptrend that we've been in since February of 2018. I mean, that's 22 months.
Right.
That's pretty intense, man. And, you know, we'll see, you know, if bottom line, if it wants to go to the bottom of the trend, that would be really intriguing. And I, you know, folks, when Teddy was just talking about Europe going higher, now this is what does happen if you're thinking about our own S&P. If the dollar goes lower, our S&P can actually go higher in price. It doesn't mean that you buy more because it's priced in U.S. dollars, okay, which gets really intriguing, doesn't it, Teddy? Do you know what I mean?
Absolutely.
It's like, okay.
Absolutely. You're 100% right on that.
Yeah. So it's intriguing how this works, because I was looking at the gold contract yesterday, and the gold contract, it's only in U.S. dollars that we really haven't broken highs. I mean, the euro broke the high. The Australian dollar made me forget it. We're way higher. You know, and so that's intriguing in itself, that it's the U.S. dollar itself that hasn't been able to break that 2011 high.
Right. Well, now it's funny you just mentioned the Australian dollar and gold. Now, let's just say hypothetically, right, that right now the economic engine globally just continues on pace for the next 3 to 6 months.
Yes.
The Australian dollar, if you look at, I was looking at the monthly charts before I came on with you guys to see, how things are really shaping up. Now, the Asian trade zone, because of the tariff wars, which we just talked about, had definitely been suffering for a little bit, especially Australia, because we noticed in 2008 and just like over the past year how they have all their eggs in one basket, okay? But now that we see that China is actually not doing as bad and Australia is starting to spread out, their commodities are moving again.
Right.
So if we start to see a spike in the CRB, that's going to start to really accelerate things for the Australian dollar, I think, because right now it looks like they have a really good chance of getting it. I mean, they're in a rally right now. That's evident. But I think that you can actually see this momentum continue, and also in that trade zone, because it's not going to come out of the yen. It's going to come out of the New Zealand dollar. It's going to come out of the Australian dollar, and definitely are minor crosses that no one really looks at in Asia, because the yen's got different factors.
Yeah, no, it's a big deal. And what Teddy's talking about, folks, is Australia is a commodity country. So the bottom line is that when commodities take off, this takes off like a rocket ship, man. There's no doubt. And in fact, Teddy, what was interesting is that in 2011, when gold was hitting highs, folks had a hard time understanding why the Canadian companies basically still weren't doing that well, meaning the gold companies. And it had to do with, folks, is that the Canadian dollar got so strong. That's the other part of the equation, which,
And you just actually did the lead up to the next thing about with this whole commodity thing with mentioning Canada. If you look at the U.S. dollar Canada,
yes,
it's tanking right now. And that's because of the commodity strength. And like I said, this is kind of a ripple effect by these different countries where the U.S. dollar, the milder currency crosses like the Canada and the Australian and New Zealand, they're becoming big bulls.
Yeah.
And if you look at the U.S. dollar Swiss, it's been trading basically between parity of 04 down to about 98 cents for the past few years, and especially the past year and a half, 2 years.
Right.
And now it's slamming down to this 97-cent area. It could be down at literally 92 to 87 cents within the next 8 months to 12 months if the dollar index hits a really big slide.
It's pretty cool, man, because that's a lot of opportunity out there for trades. I mean, when you have big turns in the marketplace, right? I mean, the bottom line is that it's not necessarily the very beginning of that you like to trade them, but the fact is that that's where the biggest chunk is, that if in fact this is a big turn, which I think it is, you can see all those different trades lining up, man. I mean, it's like, okay, we know that in a bull market you can make mistakes, right?
Well, I think we're hitting a very big cyclical turn for a lot of markets, in whole sectors,
Pretty cool, man. Well, listen, Tommy and I wish you a happy new year, great 2020. We look forward to the show on Thursday. So Thursday right here, folks, our man Teddy Cakestad, he's going to be on 2 to 3 right before me. Teddy, have a great one and a safe one, man.
To it. Absolutely.
Thank you.
Thanks, Teddy. Happy New Year, man.
Thanks a lot, guys.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 55, Nasdaq off 3, S&P's up 5.5. That was pretty intriguing, Tom, wasn't it?
Lots of action, man, for sure.
Lots of action, man. And you know, you can see those charts that were up there. Those moves, man. It makes sense, I guess. You know, the dollar's going down, the other currencies going against the dollar would go up. But they're large moves. In fact, here, watch this. Put the Canadian dollar up here, and you're going to see this move. You know, so you can go back 3 weeks, folks, and it was 133, and now you're 129. And the bottom line is that, watch this. And I was talking, when we were talking with Teddy about the aspect of at the highs of 2011, and you can see that that's when the Canadian dollar was actually stronger than the U.S. dollar. We went from 94 to $1. And so that bottom line is that it's happened a few times, but it doesn't happen that much. You know, and then, of course, you went all the way up to 146. And you can imagine, you know, in Florida, folks, we have a huge amount of Canadians that are here all the time, but they're particularly here in the winter. That turns like really expensive for them. You know what I mean?
Yes.
Look at that, 146. Isn't that crazy?
Yeah.
And then that started from 94. That's pretty intense, man.
It is. It's a huge difference in wealth when you come from Canada with Canadian dollars.
Right.
And,
figure 92,000. That would be 92,000, folks, to 146,000. That's kind of how you can.
Yeah, as in if you were buying a $100,000 U.S. house, right?
Yes.
You needed 92,000 Canadian.
That's correct.
And then you fast forward that, and all of a sudden you need almost 150,000 Canadian to buy the same $100,000 house.
Isn't that crazy?
Yeah.
That's like that's just so hard to wrap your head around. I mean, you know.
Yeah, and that's why just
great
to throw
example,
back in.
But that's so like.
I was just going to say, that's why, you know, it's so easy to think with the rhetoric out there, and it's become political. It's just a shame that, you know, you want a weak dollar because that's going to help exports, man. You want a strong currency in your country because that's what matters, folks. You know, you see what happened to Canadians when they want to come here. You want to go anywhere else. You want to have, you know, clout in the world. It's very short-sighted to think that you can trash your own currency and that somehow in the world economy that's going to benefit you in the long run. No,
it's not. And you can see this is really intriguing. You know, gold's got a bid, but this thing could get, you know, we're down 330 in the dollar right now. If that dollar, like, all of a sudden, you know, really takes a plunge, like down 900, which, you know, what happens in downtrends, folks, you know, as well as uptrends, but downtrends more so. You know, it's like uptrends, you know, normally slow and steady, up, up, up. When a downtrend happens, you know, you see down, down, and then all of a sudden the elevator just goes, shoo,
Sure.
and then starts at a new level. And if that's what we get inside the dollar, you'll see some big action because they're buying gold right now. I mean, this contract here, GCG, you know, we're only up $9. That's not a lot, okay? What it is, though, is that you, for particularly a holiday, this is a lot of volume. We already got 159,000 contracts.
Okay.
You know, and you're approaching, you know, the last swing highs up here. Well, we actually just took them out. Well, right at them, 1527 to 1525. You can see, look at this. Yesterday we did 179,000 at 159.
Yeah.
You know, so, and particularly coming on to 2020, people look and say, okay, you know, is this going to be a pullback in the dollar? And then the wild card's still going to be these bonds, man. These notes and bonds, like, you know, because what I'm trying to figure out, Tom, is that is the market sniffing out inflation? You know what I mean? Because if the dollar if the dollar pulls back, folks, okay, that in itself is not inflationary, but if hard assets start creeping up, that's basically saying that, hey, guess what? You're going to need more dollars to buy hard assets in general. And that would make sense because guess what? Our deficit is through the moon. I mean, if we fast forwarded this conversation back 10 years, the amount of calls I used to get in here from, you know, people worrying about the deficit was amazing. Now you never hear about it, but yet our deficit is like, you know, it's ballooned so much more.
It has.
And guess what? It has to be paid at some point. Now, the way it does get paid, though, or can get paid, is that you inflate your way out of it.
Yeah.
You know, so pretty wild, man.
Very true.
And Netflix, NFLX. So look at this. You know, Netflix out here, folks. You know, you're trading 323, but this is kind of a wild story, man. That they made more films than any studio this year, right?
Okay.
You know, so company began the year by joining the Motion Picture Association. It went on to release 60 English-language feature films over the course of 2019, including Oscar contenders The Irishman and Marriage Story, with a slate that includes the first animated feature Claws, a Michael Bay action thriller and comedies like Eddie Murphy's
Dolomite Is My Name.
Yeah. Netflix has doubled or even tripled the output of Hollywood's biggest studios. For the first time, the company's executives are saying that movies will determine whether Netflix hits its financial targets in 2019. Interesting, right? I mean...
Yeah, and what does happen, though, is that they put out a lot of movies, man, but they have a lot of movies that feel like almost made-for-TV movies, you know?
There's no doubt. Yeah, there's no doubt.
That probably nobody's ever heard of because they just have so many different original content that line up on Netflix, and they're trying to make something for literally every single person that could watch a movie, whether it's a, you know, young girl to an old man, or vice versa.
And when you pull up, you know, I mean, because I do this a lot, when you pull up what are the best movies on Netflix, what are the best movies on Amazon, what happens, folks, is that you don't get movies that, you know, are recent movies. I mean, you pull up the best movies on Netflix, and I think the first one is like 1950. You know, these are classics, okay? Don't get me wrong.
Sure.
But
The Godfather or something. I don't think Godfather's on there, but something like that, right? Yeah.
Exactly.
Yeah.
So it's not, you know, sometimes I look and says, okay, do I really want to watch those? And it's, yeah, I guess it depends what your feeling is at that particular point. But most of the time, I'm not hitting a 1950 or a 1960 movie.
Yes, right.
Yeah.
No, you want to know the best movies out in the last, like, 3 months on Netflix. And you know what happens with those lists, which is a little bit of a bummer, just in that a lot of them are clickbait because so many people search for that type of
For sure.
search that, boy, you could make a business almost just writing best movies to watch on Netflix web pages and selling ads and getting clicks.
And the New York Times does. There's 3 or 4 of them because I hit every time I do it. It says you've been to this page 3 days ago. I said, okay, yeah.
Does it? Okay.
Exactly. And I think they they update it, but I'm trying to figure out, does the robots update or does someone really update it? Do you know what I'm saying?
Sure. Right. Yeah.
Dow down 72, NASDAQ off 11, S&P's off 7. Tommy and I can come right back. Stay right there, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 74, NASDAQ's off 8, S&P's off 6.5. Kicking into 2020, and we will have a full day out here, folks, today. I'll be back this afternoon, 3 to 4. So, New Year's resolutions.
You brought it up. Let's hear it. What do you got? I don't have.
I don't have one yet. I got a few more hours to figure this out. But I woke up this morning and I says, "Okay, man, you gotta have something, man." Do you know what I mean? So that's always It's always fun.
And the key
outside of saying you're gonna work out more. I mean, that's
you know, being healthy in general, right? And the key that I like to think about myself, and it's all whatever works for the individual. Myself is. Don't shoot for the moon. Don't have lofty goals. The key to anything is consistency, and moderation, and you know, if you
get an achievable goal, right?
Because you say to yourself, you know, you're never going to eat pizza, ice cream, fatty foods for the next 9 months. You're going to work out 6 days a week.
Yeah.
You know, if you say to yourself you're just going to be better on a daily basis, and you're going to wake up and be better by the time you go to sleep, and you keep that in your forefront, man. You know, that you don't fail on a daily basis, and you just think about it that way. I think that's a much better way to think about things. That's how I do it.
I agree. It's huge. It's because then you're building confidence, folks, period. You know what I mean? That's like building cars in the marketplace. Building cars for higher price. Yeah, I like it.
There we go.
Totally. And our man, Mr. Larry Pesavento, you know, he was kicking off. I don't know if Larry's been, I think he's been here more than 10 years, man. I mean, this time deal is like really crazy, man.
It sure is, and I think so.
Yeah.
I think he has.
Pretty wild. Stay right there, folks. We're going to Think of Swim coming up next. Our man, Mr. Basil Chapman. Basil's been out there since 1984. I mean, he's been with us since 94, I think. No, 98 maybe? Yeah.
98, I think.
Because we were still up in New Hampshire.
2000, right. 98, somewhere in there, man.
Unreal.
20 years.
Unreal. Love it. Thanks, pal. Okay.
Thanks, man. Love you.
Stay right there, folks.